El señor Rob Nichols, presidente y director ejecutivo de la Asociación Estadounidense de Banqueros. Así también a Anthony Oster, presidente y director ejecutivo de la Asociación de Banqueros Canadienses. Bonjigwa Kunene, directora general de la Asociación Bancaria de Sudáfrica. Bob Quigley, presidente UK Finance. Vayamos ingresando, por favor, para el desarrollo de nuestro primer panel. Sistemas de pago, perspectivas regulatorias y expectativas de implementación. También les invitamos a seguir compartiendo sus impresiones a través de las diferentes plataformas sociales que ustedes ya conocen. Para nosotros es sumamente valioso que puedan dejar esas impresiones a través de las diferentes plataformas sociales.
Okay, so,
Asamblea FELABAN, Paraguay.
So we're waiting for somebody who is being wired for a microphone.
Yes.
But we're going to be discussing the dynamics in this panel. We're going to debate with the top banking representatives from across the world. We will discuss the evolving financial landscape and the increasingly volatile and fast-changing world. This discussion will explore key risks and opportunities in the markets into regulatory perspectives. And we would like to examine the rise of new payment systems, and you will hear insights into how banks can adapt and seize opportunities for improvement in this shifting environment. And as we wait, it was interesting to hear yesterday that, for example, Australia was delaying a little bit payments, right, because of kinds of fraud. So, I mean, I think we're ready.
There's Buggy, yeah.
Thank you. Thanks.
Sí, por favor, para aquellas personas que necesitan una traducción, contamos con equipos especiales. Por favor, pueden acercarse directamente a la parte izquierda de este auditorio para aquellas personas que necesitan equipos para la traducción correspondiente. Mientras, seguimos. Este es el panel número 1, sistemas de pago, perspectivas regulatorias y expectativas de implementación.
Thank you very much. So let's start with the ladies. South Africa, can you tell us a little bit of the landscape of payments in South Africa, how you've been able to work with different third parties, entities, and how does what experience can you share with this audience in this regard?
Thank you. So we've got a lot of systems and institutions that underpin our payment system. We've got agencies, one which is BankServe, which is a clearing mechanism for the country, created by the big 4 banks in the country, and it acts as a utility for the sector. We have in the central bank the National Payment Systems Department, which ensures that all payments in South Africa have integrity. Because of the size of South Africa, it's in a part of the world where it is a big economy among other smaller economies. So we have made sure that we have a real-time cross-settlement system with the other countries around South Africa. About 8 of those are on the RTGS. And underpinned by this, of course, are measures by the institutions that look again for integrity of the system, like the information regulator. They are very keen to make sure that client information is not shared widely. We also have other regulators, the financial sector, Conduct Authority in particular, who look to protect client information and protect clients as they transact on the payment system. So it's a very well regulated system that we've been able to establish.
And I assume in Africa, payments it's a very important process in terms of equalizing the society, because you have towns which they don't have well connections with the central. So I think they have done a tremendous job in this regard. Anthony, do you know around how big is the penetration of digital payments in Canada?
That's a great question, Daniel. So the penetration in Canada is substantial. I think it's 85% of Canadians do digitally transfer. It's quite high. 99% of Canadians have bank accounts. So those that don't, generally it's older people or maybe a different sort of categories, but the adoption has been very high. There was a big jump up in the pandemic. So a lot of seniors during the pandemic. And so we saw a big uptick. What's interesting about that big uptick, though, in the pandemic, as it has contributed to a lot of people not having what we would refer to as good digital hygiene. And so scams, people have been victims of scams, which is they're being fooled out of their money. A scam, that's how we define in Canada, is someone voluntarily sends their money or gives away their credentials, so they're then fooled out of their money, versus fraud when maybe their computer is hacked or an employee, a rogue employee takes their money. And scams have been growing dramatically. And I think it's because a lot of people don't have that right hygiene. And so the Canadian Bankers Association has been working with a number of different sectors and government agencies and law enforcement to work on that. But a key part of that is education and awareness, and trying to better improve people's awareness, because they've been created this access to payments, but they've also been at bigger risk.
And do you have data in terms of who is responsible in Canada in general terms? I mean, because what's going on in many countries is that governments are trying to always blame banks that are not doing the right. So how can you consider that the data in Canada?
So there's a Canadian Anti-Fraud Center where people report their scams. Interestingly, the Canadian Anti-Fraud Center estimates that only 5 to 10% of scams are reported. A lot of people are ashamed or don't know where to report it. But what they have estimated based on the data they've received, 65% of the scams come from either online or telecom, either text or phone calls. And so what we've done in Canada has formed this cross-sector alliance to try and fight the scams, but also the education element. And that's, we were able to make the case to the telecoms and big tech to participate in that because of the role they play in the value chain of the scammers. I mean, the scammers, obviously the telecoms or big tech don't want that to occur, and that's why they're working with us. But the bad actors take advantage of those channels, and with people with poor digital hygiene, so that's the kind of the offside of having a growing adoption is giving people the tools to better manage and how they access and use that.
I have a question for you after the second round regarding telecom companies. And
right.
Bob, ecosystem of fintechs and bankings. How you handle that in UK?
Well, let me start with a little overview of what's going on in payments in the UK, which is a lot. I think 15 years ago, we probably led the world in payments technology. Today, we don't, and so we're on quite a program to try and catch up, which definitely involves the fintech community significantly. But our system today is based around three essential systems, what we call BACS, CHAPS, and fast payments. That makes about 95% of all bank-to-bank payments in the UK. We are looking to put in place new systems as we speak, and I think unlike Brazil and India, where the direction has been very much from the top, from the government, from the central bank, in partnership with industry, I think this time around industry wants to lead the new development. So we're developing with the government something called the National Payments Vision and Strategy. Why, you might ask, have we fallen behind over the last 15 years? And I think honestly it's a weakness of our regulators in the payments area, who have not really been as good as they could have been at supporting innovation and technology delivery. For that reason, we're encouraging the central bank, which used to be responsible for payments in the UK, to get back more involved. We think the Bank of England has superb expertise in the area, and it is, of course, leading all the thinking on the future of a potential digital pound, central bank digital currency. We think we'll be an early follower, so not the first country. Brazil is imminent, I think. UAE is imminent. So we won't be the first, but we'll certainly be amongst the leaders. And I'm very keen on that. For that reason, we'll need new infrastructure to implement settlement in this new digital PAN world. And so the industry has built something called a regulated liability network. I'm sure Rob is going to talk about the one in the States in a minute, because they're doing exactly the same, I think just a little bit behind us. It's essentially a bank-based, peer-to-peer, real-time gross settlement system but which crosses not just cash, but other kinds of assets. Now that's paving the way, obviously, for digital tokenization. We see a big opportunity, not just in tokenizing deposits, bank deposits, but in tokenizing real-world assets. And I've been pushing our government very hard to create the best regulation in the world for digital assets. That leaves stable coins, just to mention. My own personal view, this is not a UK finance view, is that stable coins are sort of an interim, unnecessary step between crypto and central bank digital currencies. And if we move fast enough to central bank digital currencies, I'm not sure that we need stable coins. I think that will be a difference, by the way, between the UK and the US. I think in the US, stable coins will be much more of a feature for a lot longer. I'm not sure they're going to be in the UK. Open banking, very briefly. We led the world in creating open banking. This is the principle under which fintechs, and indeed the big techs, and indeed banks themselves, can access information from people's bank accounts as long as they are regulated PISP. We implemented stage 1 of that at vast cost to the industry. The truth is the take-up was not dramatic, but since COVID it started to pick up, and I think we're now on stage 2 looking at new applications, and I think open banking will take quite a leap in the next year or two. Personally, I'd like to see us turn that around on the big techs and say, okay, well, we've built this huge system, we're allowing you access to our data, but you have more data than we do on our customers, in your big tech platforms, in your social media platforms, in your messaging systems. Why doesn't the government start talking about making the big techs make their data available to the banking industry, since we've done it through open banking? I'll stop there. I think that probably covers the landscape. I hope I answered your question.
Maybe just for you to add, who owns the information of customers in this open banking environment?
The customer. The customer has to give permission for anybody to access their data.
Don't you think that what banks have done, or telecoms companies, it's their own information and they have to take advantage of that on their own?
No, I think in the case that I'm talking about the big techs, not the telecom companies. I think the big techs, their whole business model is you don't pay for their product, but they use your data, and of course you agree to that through your terms and conditions. But since they have access to our system, where we provide data that we have paid for a massive system to create, I don't see why we shouldn't have access to theirs.
To be honest,
and by the way, bear in mind that open banking came out of a regulatory reaction to banks being dominant in the industry, being oligopsonist. The big techs are far more, have much higher market shares than banks have ever dreamed of having.
Exactly. So, because if Amazon is asking for our data, and we're asking Amazon for their data, and we haven't received anything yet, so we can talk about that.
Good luck.
Rob, it's the payment system, it's a public good?
So let me, I want to get back to the who owns the data, because there's a healthy debate happening in the United States about that. But let me first just level set what the payment system is like in the United States, because we have an awfully weird system. So 10 years ago, there's 4,500 banks in the United States. 10 years ago, the largest 10 or so banks started to put together a set of payment rails called real-time payments that we call RTP. And they brought that online in 2017. So starting in 2017, we had a payments architecture that was working nicely in the United States. Then the Federal Reserve, a few years later, said, hey, we want to get into this as well and create a second set of payment rails. It's called FedNow, and it just came online 1 year ago, so in 2023. So now we have two sets of payment rails, one established by the private sector, the US banks, and a second established by our central bank, the Federal Reserve. So it's kind of an odd system. I don't think there's many like it around the industrial world. There were some questions on the part of the US banking sector. Why do we need a second one when we already have one that's working just fine? So they went ahead, they did it anyway. It took several years longer than they anticipated, but it's up and running now. In terms of volume and use, RTP, the private sector payment rails that I mentioned, has about 1 million transactions on it per day. The Federal Reserve has not yet released any data around how much activity there is on the second set of payment rails. So our guess, we don't know, but our guess is it's not getting utilized to the same extent as the private sector vehicles. So we have two sets of payment rails.
Both systems?
So the rub, so in addition now that we have two, as we're thinking about it, the American Bankers Association, what's the most important challenge that we need to solve for now, which is interoperability. So what we've done is sat down with all the banks and sat down with the Federal Reserve to make sure, listen, for all the merchants and all the businesses and all the end users of the system, we need to make sure these two systems work flawlessly and seamlessly together. The last thing we need is a balkanization of the payment system in the United States. That would be a disaster. So that's been our number one priority, is making sure these two systems are interoperable. And back to the debate over data in the United States. So there's a big, healthy tension here. Banks, of course, in the US regulatory model have to be incredibly careful with people's data. And I agree with Bob's thesis that, of course, it's the people who own their own data. Where we have some tension in the United States marketplace is between banks that have a certain set of privacy requirements in terms of preserving and protecting your personal data, and fintechs that have a looser set, at least in the United States, a looser set of privacy requirements. And so a lot of times when banks are doing businesses with fintechs in the States, if there's a data breach, the consumer's like, oh heavens, my bank is the one who lost my data. It wasn't the bank in most cases. It's the fintech company that has a different set of security protocols and a different set of requirements. So that's a bit of a tension in the US marketplace.
And you know, at least in Mexico, people confuse the difference between a bank and a fintech. So
Right.
we really try to keep the system going correctly in order not to lose faith of customers in this
Agreed.
regard. Bongiwi, what would you do different in South Africa in terms of what you just mentioned before? It seems that it's very well regulated, the security, it's very well done. If you have the opportunity to try different things, what would you do different?
Okay, so it's a set of protocols. First one being on information sharing. Who do you share the information with, under what conditions? And if there is a breach, who takes liability? So on information protocols, we are guided by the information regulator, but we are also guided by a number of pieces of legislation on how we conduct our work as banks. What is new on information sharing is, as we are seeing a rise in new crimes, including phishing, and others, we now have to collaborate differently with law enforcement agencies. So it's the internal law enforcement agencies, which are South African, and it goes right up to Interpol. In setting this up, we've also had to share the MOs, the modus operandi of how a bank would solve any incidents. Before you label it a crime, how do you solve that incident? And in our case, we found that our law enforcement agencies had deficiencies because we had a time between 2009, which was almost 9 years, of an increase attempt at weakening the law enforcement for the country. So the bank stepped up, offered to work with the system of criminal justice, and we've set up a lab where we do with them. In fact, it's more demonstrating than they do. Digital and financial forensics, and we're also looking at accounting and auditing forensics. And in so doing, you are now having a model where the private sector is the lead actor in working with government and acquiring either new technologies, deepening the skill set of the people who are working in that environment, and creating new platforms of how you work or integrate into your payment systems agendas of working against cyber crime and other very big crimes that we face as a country.
Thank you very much. Anthony, how do you see, in your point of view, the interoperability among banks? It's a well-done architecture. There has to be more done in that regard. And do you think we need more regulation or less regulation in terms of the payment system?
So in the Canadian context, the interoperability is very strong. We have in Canada, we have Payments Canada, which is an entity that is essentially sponsored by the Bank of Canada, the central bank. Payments Canada has a bit of a convoluted governance model, but as part of that, it has not just banks, but it has other payment service providers that are involved. So what's interesting is in Canada, there are 60 banks, but there are over 2,500 payment service providers, so fintechs or other businesses that do some form or elements of payments. The regulatory process for the banks is very complex, highly regulated, if not overly regulated. The Canadian banking system tries to take itself as a bit of a Boy Scout, and so if Basel agrees to something, Canada does it first and does it higher and faster. We're actually ahead of the US and Europe, for instance, on Basel III Endgame, unfortunately for my members, which constrains their growth and such. But anyway, so we're highly regulated, and our regulator is not the central bank, but the central bank obviously has the regulatory authority over the payment system with Payments Canada. What's interesting is the federal government put in place a law a couple of years, or I think it's 5 years ago now, called the Retail Payments Activities Act. And they've slowly implemented it, so they had the act, and now the act has turned into regulation, and that regulation kicked off on November 1st. And what that has is these 2,500 plus payment service providers have a year to register with the Bank of Canada to comply. And there's a bunch of rules and such that, what capital they have, some processes they need to have to be able to access the payment system. But the one thing that's missing from the Retail Payments Activity Act is there's no market conduct. So although these payment service providers now have to register with the Bank of Canada, they're not actually, it's more about just making sure they have enough capital, so if they're going to be accessing the payment system, it's not about how do they treat consumers. Whereas there are 6 different regulatory bodies that oversee Canadian banks, including one which is called the Financial Consumer Agency of Canada, which is similar to the CFPB in the US or whatever. It does market conduct. So if our members had an issue in the payment space, Canadian consumers that are going through that experience would be able to go to the Financial Consumer Agency of Canada and their ombudsman process if they had a complaint. But there's no identical process for those 2,500 payment service providers. So right now it's a pretty good job, easy to be a payment service provider in Canada because it's lightly regulated, and they have a fraction of the cost that the banks have.
And those companies, those 25 companies, they have like cybersecurity processes in terms of dealing that they're doing the right things?
There's no way to ascertain that, but I think part of what the Bank of Canada will be doing as they register is assessing them and evaluating that, and I think through time that'll be part of the process, but it's a bit of a Wild West on that side of the ledger.
Interesting. So, Bob, What do you think about asymmetries in terms of regulating payments for fintechs? Sorry for going again, but you are very advanced in terms of payments, and I've been to UK a couple of times. I was last year. We went actually with a group of bankers in Mexico to see how they have developed the payment systems. But everybody was very concerned regarding asymmetries in terms of regulation. And it seems that nobody wants to really take the elephant out of the room, right? At least in our country, fintechs have been considered as a very high entities who has increased the financial inclusion. So in that regard, sometimes they seems like they blind. Do you suffer something similar in the UK?
So we have amongst our membership quite a lot of fintech companies. We are pro the benefits which fintech companies bring to our economy, which essentially are around innovation and as you said, inclusivity. But we also work on the principle that actually IBFED, working with thought partners 2 or 3 years ago, developed, which is that principle of same activity, same risk, same regulation. So if you're a payments business, you may be a fintech, but you are, the core of your business model is processing payments, we would expect you to be regulated in a similar way to the payment part of a bank that was subject to regulation. And it is happening. So we have a concept of what's called a PISP in the UK. We have a sort of a graded structure of regulation depending on exactly what you're doing in payments. And as you do more and more complicated things, and as you move towards taking deposits, you are more regulated like a bank. So it is improving. But I think the issue you highlight is actually a subset of a wider problem, which is if you start thinking about what the big techs are doing in banking, and if you think about all the activity that's going on in non-bank financial institutions, the fintech issue is the tip of the iceberg. The really bigger part of the issue, I think, is around non-regulated bank activities within big tech platforms, and then all the activities, a lot of which has been driven out of the regulated banking system into the non-bank financial institutions, which is almost completely unregulated. So that, I think, is the issue that the FSB, they talk about it, they constantly review it at every meeting, but I've yet to see a really convincing proposal. And even where we've won the argument on same activity, same risk, same regulation, it's tended to be it's tended to be activity regulation by definition. If you think about what banks have to deal with, on top of activity-based regulation, they have prudential capital, they have conduct regulation, and they have governance of their institutions. These do not typically apply in the regimes where we have introduced activity-based regulation. So I think there's a long way to go in bringing these companies more into the regulatory net, depending on exactly how complex their activities and how bank-like they are.
Interesting landscape. Rob, now that you have Mr. Elon Musk as vice president, I'm sorry, now that now that Elon Musk is going to be very active, he was the founder of PayPal, right?
Yes.
I don't know if everybody knows the story. He went to Canada. He wanted to change some traveler checks, and he realized that the system was not really the best system in the world, so he created PayPal. And now we are competing with PayPal with all those guys who are really competitive and very talented. What about less regulation in the U.S. with those animals, and how you see the landscape for banks in this regard?
Absolutely. So there are a lot of payment offerings in the United States, a lot of different P2P options, and kind of our mantra with regard to how the U.S. banking system approaches this is safety equals trust. The safer and more secure the payment rail is, the more the American people will trust it. And so with great respect to all the other P2P systems that are doing business in the United States, they just pale in comparison to what the U.S. banking system has put into place. And so that's not to disparage, the PayPals and the Venmos, but Zelle is safer and more secure. Zelle is the P2P system set up by U.S. banks. So it's just really, Danielle, that simple. Safety equals trust. So the more safe and secure the payment rail is, the more people will trust it. And that is the foundational principle in the United States upon which we, hold all things important.
This is an open question for who want to. We started to talk a lot about blockchain. Now we don't talk anymore about blockchain, but there's many theses regarding that if blockchain really develops, maybe the payment systems could be different, more secure, and less expensive for consumers. Somebody has?
I'm happy to pick up on that.
Please, go ahead.
So I think we have been talking about blockchain for a long time, and it hasn't really had its moment in the sun. It is still not clear to me whether it's going to have its moment in the sun, but if it's going to have one, the thing that is going to drive it is the wide-scale adoption of CBDCs and then digital tokenization of real assets, because this is where the particular benefits of DLT really come to the fore. So I think the short answer to your question is it hasn't had its day. I think it may be about to have its day, and what's going to drive that is the wide-scale adoption of CBDCs and then digital tokenization of real assets.
Let me pick up on that. Also in the States, blockchain still hasn't, I completely agree with Bob, hasn't had its moment yet in the sun, but there are some applications, I think, in the United States where this could be a fantastic technology. So, show of hands, how many of you have had to get a mortgage in the United States of America?
Yep.
Okay, just only one or two. So, for those who haven't, here's what that process looks like. You go with your mortgage company, you go into an office, and you sit and sign documents, a stack of documents this high, and it takes like 2 hours of time. That makes there's no efficiency there whatsoever. That's like having the blockchain and being able to digitally sign all of these documents, do it in 10 or 15 minutes, and they're all harmonized and cataloged and kept the proper and appropriate way, would be a wonderful use of blockchain from a consumer standpoint in the U.S. economy. We're not there yet. There's been a lot of conversation about how to use blockchain from a consumer standpoint versus a business standpoint. But I do believe there'll be some applications that'll create efficiencies in the States, and heavens, we certainly need it.
You know, just to add to these comments, do you have something to as well, Bungie? But just on the tokenization, I think Bob is right. And there's actually some pilots going on tokenization with the commercial banks doing it with certain assets. So they're all doing it in a closed network. So it's not an open blockchain, but they all have agreed to the sets and processes. And the pilots are going well. And that could be super helpful if you're thinking about large correspondent banks having to settle each other, a lot of different things going on any given day. You could put any type of asset into that once you agree to the model. And so it's encouraging to see that, because if you could crack this on a commercial basis or a wholesale basis, you could see something like cross-border currency exchange getting significantly sped up. And you think of how long it takes to settle something like that and how complex that can be. So there's some hope on that front. But anyway, just to say that's one thing I see.
Yeah, we also have research into blockchain, and 2 use cases in particular are very interesting. Trade, intra-African trade is very low, and part of the reason why it's so low is the unpredictability of payment systems from one country to the next. And by using blockchain, we are finding that you really cut into that uncertainty and you deliver on time without any questions on the transaction itself. Then the second use case we've been looking at is if you were to involve government services. How predictable would it be, and how well would you make it take off if you are looking at services that are offered and monetized, and you know the regularity of those payments, and it's something that National Treasury and other actors in our ecosystem are very interested in looking at, because it would then tackle head-on any issues related to corruption and any issues related to, are you delivering government services where they are needed? And how have you determined that? There's a lot of research that we are currently working on in making sure that if it can be delivered, blockchain should be the solution.
If I may just add on one comment. So you asked in your question, You referred to the potential benefits of DLT in terms of lower cost and efficiency, and those are the things we mustn't lose the sight of. And people sometimes say to me, well, you know, what's the point of having a blockchain-based CBDC in the UK if we already have digital money in our bank wallets? And the answer to that really is those two things. It's potentially the ability to automate settlement so that you reduce cost, increase efficiency, and also the ability to attach smart programs to that money. So this is what DLT, I think, can deliver in the context of CBDCs and digital tokenization, and it is why, if DLT is going to have its moment, this is going to be it.
And why do you think that this theme of CBDC has come like a religion, or people hate it or love it? What do you see? There's an equilibrium in this topic?
Well, so talking in places that hate it.
Well, I'll start, because my story here will be interesting. So the Federal Reserve, I mentioned earlier, who created this separate set of payment rails, started down creating a central bank digital currency in the United States, and Congress, but they had to get congressional approval to do so, and Congress has said no. There's no use case in the United States for a retail central bank digital currency. It's a solution in search of a problem. I heard someone say that the other day. I agree with that sentiment. And some of the reasons that the promoters in the United States were saying, here's why we want a central bank digital currency. It'll solve for financial inclusion to bring the unbanked people into the banking system. We don't actually think it achieves that. It would be another payments offering, but we already have a crowded set of payments offerings in the United States. So it fizzled out pretty quickly in the United States. The Federal Reserve has shelved and mothballed that project, and Congress, people in both Republicans and Democrats in Congress, have said we're not interested in having the Federal Reserve pursue that. So it got very popular, it was very in fashion, and then it went away.
And so I think there's another reason why in some countries it's more difficult, and that is the link with identity. It's quite difficult to see one having a CBDC in a country if you don't simultaneously introduce digital identity. Because one of the things you do typically when you introduce a CBDC is to limit the amount of the currency that can be held by any individual. And if you can't identify the individual, you can't effectively apply those limits. And in some countries, including the UK, you know, there is a sort of what I regard as a slightly bizarre fixation with the government not knowing who you are and not being able to track what you're doing. It doesn't bother me in the slightest, but there are people who get very exercised about this. I think there's a large part of one of the political parties in the US who are vehemently against this issue. In other countries, it's the black economy that are against it because they don't want their activities being tracked for tax purposes. Yep. So this is going to be a rocky road, okay? But one of the reasons is that it will, in the end, if the government sets it up in a way that it should, it will increase transparency, and some people don't like that.
And Bob, seeing that you're a big fan of CBDCs, don't you think there's any risk for disintermediation for the commercial banks?
Yes, that's all a question of how you implement it. So we're literally going through this debate in the UK as we speak. I think the Bank of England has gone over 5 years from being really quite cautious about introducing CBDCs to being really now positive, but they, in the process of that journey, have recognized the risk of disintermediating bank deposits and indeed of affecting the way the transmission mechanism for monetary policy works. And so the latest approach is very much one of partnership with the banking sector, not just the banking sector, with the banking and financial payments in the widest sense industry, to say, okay, we want the benefits of this for consumers, but we don't want to completely destroy the system we've got. So how do we work together to do this? And I think that's the best way to do it, which is probably why more countries will be interested in a wholesale CBDC. And of course, the Bank for International Settlements is working on several different projects, but mainly Project Agora, which is looking at cross-border settlement of wholesale CBDCs. I think you'll see more of those happening faster than you will retail CBDCs. But then you've got Europe, where the Commission has a political objective to use a digital euro to cement Europe. So, you know, there'll be some places that nevertheless, notwithstanding the lack of business case, will want to push ahead.
Agustin Carstens, who's running the BIS right now, he's stepping on the next summer. He's very engaged with this CBDC. So we heard a lot of. What's the view of Canada in this regard regarding cryptocurrencies from the central banks?
Canada doesn't have the same sort of libertarian stance that's in the history of the U.S., but
But what's interesting is we have a similar conclusion, came out of a different path, but ultimately, as I mentioned earlier, 99% of Canadians have access to a bank account. So the inclusion argument was what they were originally saying would be good for inclusion, and then they kind of realized, well, it's 1% of the population. Then when they went to think about that 1% of the population, they're living, just below the Arctic Circle. They don't have power. They don't have a phone. They don't have a lot of money to start with. So there are a lot of other social issues. Most of those people don't even have access to clean water. And so they realized, okay, if the government of Canada is going to be spending money on something, it probably should be on getting them clean water pipes, not a CBDC. But they actually, what's interesting is the Bank of Canada did over a number of years some really good research. They did surveys and looked at things, and they did a report earlier this year where they essentially concluded a retail CBDC doesn't make sense for Canada right now. If we were going to do one, they called it we would do a two-tier, which is the concept that Bob was talking about that it would be similar to the model of the monetary policy, whereas currently is the central bank with the commercial banks are doing the interchange of money, and then those banks are pushing the money out into the economy. So they would do something similar if they did a CBDC. So they confirmed at least the model they would do. And right now, obviously, I think that they're thinking about wholesale CBDC, just given the value that could be given there and how much easier that would be to do. So, but it's been interesting, and we very much agree with that because of the risks. Additionally, if we just have a logic, take a step back and think about logic, if you have a really good payment system, and so for instance what Brazil has done from the point of view of the growth in payments that they've done with it, is it PIX? PIX? Yeah, PIX, sorry. So PIX, if you do something like PIX, you don't need a CBDC because you're getting people access to a digital form of payment. And that's far more pragmatic and less costly and less disruptive, I think. And it enables a whole innovation. If you think with PIX, there's also been growth in fintechs and a bunch of new products and services out of the banks. I think that sort of evolutionary process you can get done without having it be a CBDC.
I think, just to finish off on this one, I think there's one reason why it is still going to happen in some places, notwithstanding there might not be a business case or even like in Euroland, the sort of political objective, which is this, that over the last 10 years, a sort of war, if you like, has developed between central bank orthodoxy and the crypto world. Mm-hmm. And I think what happened 4 or 5 years ago is that some of the leading central bankers woke up to the fact that their normal way of governing and regulating and operating central banking was being challenged by the crypto world, and that if they didn't create their own digital currencies, that could have really very significant and far-reaching consequences. So I think you will see. I think retail CBDCs will happen, maybe slower than wholesale ones, but I think they're coming. It's just a question of time.
Very interesting. We'll have this conversation in 5 years and we'll see
Yeah.
the outcome.
Daniel?
So what do you think about, this is for review, does Bitcoin or Ethereum, it's part of the paying system, should be a complement, should be run in the same rails? Should we make a difference between those kind of assets and what we understand right now?
So in the States, there's still a debate within our regulatory and legislative community with regard to Bitcoin and all of those crypto assets. What are they? Is it a speculative investment? Is it a currency? Is it a commodity? Is it none of the above? Is it all of the above? So these are very important questions because that will determine how Bitcoin and the rest of the digital assets will be regulated in the United States. So we're in the midst of a regulatory conversation and a legislative dialogue around who should have control over these products, whatever you want to call them, in the United States. And so we have different regulators all trying to wrestle for jurisdiction, and we have legislators and politicians also trying to put their stamp on it. So this is a very, very robust debate in the United States. There have been no conclusions drawn over how and who should regulate it. But there is agreement, at least, that there needs to be some supervisory architecture, and yet none exists at this moment.
In this regard, Rob, do you know if there's any paper or research regarding if cryptocurrencies are doing more monetary increasing the monetary base, or not necessarily?
I think the jury's still out there. I haven't seen a lot of research there. But interestingly, and Danielle, you just called them cryptocurrencies. They're not even used as currency, at least in the United States. They're not being used as a currency. So what they're being used for right now is as a speculative investment tool, and that's fine. But there needs to be we think at the American Bankers Association, there needs to be a supervisory architecture. There isn't one, and that's rather concerning.
If you reflect on it, if you add up the total market cap in aggregate of all cryptocurrencies in the world, it's under 2% of the global equity market, or under 2% of the global debt market. That's before you even get to real estate or commodities or foreign exchange. So as far as I'm concerned, whilst interesting, it's a sideshow. The big opportunity here is the digital tokenization of real world assets. That's where we're focused.
Yeah, and I would take it a different angle. One of the concerns, if you were trying to connect that to the payment system that we see, at least in Canada, is beyond the speculative investments, is a huge amount of fraud goes through the payments going into crypto coins and such. And what's interesting is there's a couple different things. Crypto miners often mine crypto not to create more crypto. Obviously, they can make money on that, but it gives them an opportunity to blend it in with crypto they may have stolen or received on a negative basis. Like, so maybe they use a bot to freeze hospitals' computers, get the hospital to send them crypto. They blend it in with what they've mined and then kind of sort of launder it through the crypto system, kind of intermix it, and then use it. But the reality is although there's a track record, you don't know who the person behind it is. You just know the key. So although it's on the blockchain, people have the ability to mix and mingle and do things. And the amount of money that's moved on a fraudulent basis or money laundering basis is significant. Not sure if Anna Bly is going to be doing her next panel or not because she has to travel, but one of the interesting things she's been talking about, so she's the head of the Australian Bankers Association, when they turned off the automatic submission of money from accounts into crypto, they reduced consumer scams through that channel by 65%. And so often what was happening with an instant payment settlement system in Australia, someone would get scammed, they send the money to who they think their boyfriend or their grandchild is or whatever the scam model is, that goes into their account, and what used to happen is that account, that receiving mule account, would automatically send it into crypto. They turned that off and reduced scams by 65%. So, it's being used for nefarious purposes. There's also the investment purposes. There's the real purposes. I've seen people use it for currency purposes, like if you want to buy maybe the rand.
Yeah.
It's pretty volatile, and you have US dollars. Doing it through crypto can save you a lot of money and a lot of time. It's much faster than trying to go through a correspondent bank or something. So there are legitimate purposes for it, but until we solve that angle, I'd be very concerned, connecting it formally into the system.
So maybe I can comment at this. In our case, we're seeing a lot of organic growth and curiosity from all market players when it comes to this. There's even a supermarket chain which allows you to pay by Bitcoin now. But most of the activity is being led by the central bank. And the central bank has realized that crypto can be used as a store of value, and they have not said it is now part of currency. So they've opened up the market and allowed different participation in it. Obviously, there are a lot of concerns about crime, but also concerns about who is driving the market development. If it is being driven for good purposes of advancing the financial sector, I think there would be a lot of interest and wanting to get involved.
So unfortunately, we run out of time. I think this is a topic that we can talk the whole day. The industry has been there has been a lot of contribution from different partners, a lot of disruption in the industry, especially in the system, right, in the payment system. Final remarks, how do you see the future of the system in your country Then we'll go with Canada, UK, and the US. Please, final remarks, 2 minutes.
It's going to be really strong because the approach we have taken is that of a payments ecosystem modernization. So for the next 5 years, the short runway is improving anything and everything that's in that ecosystem. And it's a very strong partnership between the banks and regulators.
So Canada's in the process of undertaking open banking, but if we go fast forward a bit, I think once we get that settled, and that'll be in the next couple of years for the sort of first wave of open banking, I would predict that potentially Canada could go to open finance, where people could, beyond just read, potentially write, like for the point of view of having a fintech or something could, you say it tracks your bills and it could then take money out of your account and pay a bill on your behalf or something, or that sort of thing. So I see that the expansion to open finance being something. Parallel to that, I see an increasing role of AI, bots and tools and things managing your finances. And what will be interesting is what's the oversight? So one of the things that Canada hasn't fully figured out right now is the oversight of that. We have some legislation that is in front of our parliament, but we have a kind of a hung minority parliament right now. There's not a lot happening, so it may or may not get through before the next election, which will be less than a year away. The other thing is using AI within the systems. Like our Canada's banks, the large big 6 banks, have all won awards for leveraging and using AI. So it'll be interesting to see how they grow and evolve that. Scams that we talked about earlier have been growing dramatically, and so how we manage scams and the liability and protecting consumers will be an interesting thing to see develop. And then finally, how can we get the broader ecosystem to fight scams, not just be on the liability? That'll be a critical thing for us going forward to figure out.
Very briefly, I think we'll move quite quickly to implement the regulated liability network, the real-time gross settlement system I was telling you about. That will probably live in parallel with the Bank of England's own system. I think we will introduce a wholesale bank, central bank digital currency, probably a retail one after that. I think we will have digital tokenization of real assets where we really intend to lead the world. So I think all of this stuff is going to happen. It may be 5 to 10 years, but it's going to happen.
Very quickly, we're trying to go fully digital in the United States. We still have Americans who write checks, and we're trying to have them not write checks. And so we just launched a new campaign called Practice Safe Checks. And the more we can wean people off paper into the digital system, the better. But then, so that's the opportunity, and then the challenge is consistent with the panel, staying ahead of the fraudsters. The use of AI against us is a challenge, and so that's what we need to remain ahead of.
Tremendous panel, talented people who understand their industries, their countries, the world. Thank you very much for your time, for your patience, for your knowledge, and thank you very much for attending this meeting. Thank you very much, guys.
Thank you,
Thanks,
Daniel.
Daniel.
Thank you.